Hello, everyone. Ugodre here, and this is my money brief. All right, on today's money brief, I want to talk about Nigeria's first domestic dollar bond. Yeah, that's what they call it. Its first domestic US dollar bond, to be precise. I'm sure you'd be wondering what's the difference between this dollar bond and all the other ones that we've been having before. So, the other bonds we've had before is called the euro bond, and euro bond is different from the Nigerian dollar bond, basically for a number of reasons. One, the euro bond is traded on euro exchanges, foreign exchanges where you can trade bonds, while the local bond here is essentially traded on our own local exchange. So it's just a bond for Nigerians, essentially. So it's for the Nigerian market. So it's almost like when you want to list a stock on the exchange and you list it on the Nigerian exchange versus listing it on, say, the US stock exchange or something. So that's essentially the difference. And of course, another major difference is that for this particular domestic US dollar bond, the minimum entry, as in the minimum subscription, is $10,000. So if you have $10,000, you can buy it. But if you were to buy a euro bond, if you wanted to like sort of buy it in the primary market, you would be paying $200,000 or thereabout. Quite for the big boys. So and then this one is essentially for Nigerians, and even though foreign investors could still participate in it, but basically for Nigerians, this particular bond, and it's not really at the sort of size that most euro bonds are usually done. So this is just $500 million of bond, even though the government says it plans to do $2 billion at the end of the day for this particular issuance. But the first tranche is $500 million. So the question I've been getting is, should I invest in this bond to go? Like, is this worth the money? So before I get there, let's just provide some unique characteristics of this particular bond, and that would, take me to whether it's a good investment or not. So the first thing you want to know about a bond whenever it comes is what's the yield, right? The interest rate they're going to be paying on the bond, or the coupon rate. And so for this particular one, the government is going to be paying 9.75%. So if you invest $10,000 in this bond, they're going to be paying you about $975 every year. Yep. So if it's $100,000, then that's 9,000, 75, whatever, every year. So you get the math, right? So 9.75%. So and according to the DMO, that's the government agency that is selling this bond on behalf of the government, they'll be paying interest twice. I think it's semi annually. So the first part will be the first half of the year, and the second. But it's not going to be. It's not like they're going to be paying you that 975, or it's still 975 for the year, but they'll pay you twice. So they sort of split it. So you get maybe, let's just say, 450 or 470 or thereabout dollars every 6 months, and so long as you hold that bond to maturity. And then it's a 5-year bond. So at the end of 5 years, they're now going to pay you the full $10,000 that you invested, assuming it's $10,000 that you put in there. So again, it's 9.75% coupon. Interest payment is paid semi-annually, so they're going to pay you twice a year, and you can now get the full value of your capital at the end of 5 years. Nothing extra on it. The extra you're getting is the interest rate that you're paying you anyway. So that is it for this particular series, and government says there's going to be more series coming up. I think the target is $2 billion at the end of the day. Now, the next thing you want to know about the bond is, what are they using the money for? So, well, government said they want to use it for infrastructure, for the country, and providing services to the country. So essentially, they're going to be paying back that bond from taxes. That's also one thing you want to know. How do they plan to repay the bond? Because that sort of determines whether they can actually pay it or not. So it's a very much secured bond because it's backed by the full faith and credit of the government. But look, we that is not to say that governments don't default like we've seen in Ghana. So defaulting in a bond is possible, but Nigeria has never defaulted in a bond and on any bond, and I don't think we're in Ghana's situation per se, or we're close to it yet. Even though I think we have serious debt issues in this country, but I don't think we're that close to where government might not be able to pay for that bond, especially being a domestic dollar euro bond, dollar bond, not a euro bond, dollar bond. I doubt we're in that sort of levels. So, how is this a good investment? One other thing that is important to note as well is that the government said it's tax free. So, that money they pay you, it's not they're not going to deduct any tax from it. So, you're going to be getting your $975 every year tax free. Assuming it's $10,000 that you invest in here. So that's it. So if you don't have up to $10,000, you can buy. But if you wanted to buy more than $10,000, then you can buy in tranches of $8,000. But you must at least drop the $10,000 first. So that means you can invest $11,000 or $12,000 or $13,000. But minimum is $10,000 before if you want to be part of this issuance. So you want to own it. You have to 30th of August, by the way. So this bond closes on the 30th. I think that's on Friday or Thursday or something, if I'm not mistaken. So where today is today's 27th, so 30th is on Friday. Yeah, you got it. So Friday, this bond, this transaction ends. So you have to Friday to buy, except you want to wait for the next series. So should you be buying this or not? Buy, sell, or hold? So I think this is a buy if you are someone who has money in domiciliary account. A lot of people who just keep money in domiciliary account and don't really have much use for them, right? And or don't use them often. So perhaps they just keep it there for protection or just as part of your savings. So if you're someone who likes to save in dollars, and then I think this is a good investment for you. I mean, if you put that money, leaving it in your bank, it doesn't earn you any kind of return close to this amount, close to 9.75%. So 9.75% is actually a very decent return on a dollar investment, especially a fixed income security. Remember that the US is about to cut interest rates. So interest rates for most foreign transactions would start to drop. And so if this one is already pegged in or locked in at 9.75%, then you essentially have that kind of inflow coming in. So for your $10,000, you're just going to be getting $975 every year, which is over 1 point something million per annum if you convert to Naira. Now, remember that this is in dollars, so you're also quite hedged against exchange rate depreciation as well, and which means if the Naira depreciates further, then you even make more money in Naira by the time you convert that dollars if you need it for something. So that would make it a buy for you. It's a sell if maybe you have better sell, of course, means don't buy. If you have better need for FX or better investments, FX investments out there, maybe you're somebody who likes to invest in stocks or forex trading, and you think you can make a lot more than 9.75% annually. I know people who probably do that in a month, right? It's pretty risky, but there are people out there who can return that kind of money on a monthly basis. So this might not be a wise investment for them. And there are people who maybe just feel like Nigeria is too risky and so might not want to invest. So if you're that kind of person, then this is not for you. It's a hold if you don't have the money. I mean, if you don't have the money, what are you doing now? So there's no need, but you can't go out, don't go out borrow to do this because I mean your interest rate for borrowing is obviously going to be higher than the amount they're paying you in terms of return. So hold, just abstain completely. So I am in the bucket of those who want to buy. I think that it's a decent investment to buy, especially if you have, even if you have a portfolio in other things, maybe in stocks and other bonds. I think it's a good investment to have. At least just helps protect your portfolio. Of course, you don't have to wait till 5 years. If you can't wait till 5 years, you can always sell the bond and move on. Now, but there's a risk there because bonds are like stocks. So a bond on the first day of listing is listed at par. That means $100 for one bond, right? So that's the price of the bond on day one. Now bond prices oscillate, so they can be 102, it can be 98, it can be 95. So the lower the bond price, it means that investors are dumping the bond. Maybe they don't think that, maybe they fear that government might not be able to pay the interest rate when it matures, and so they tend to dump the bond, which means you can sell it in the market. And when there's more supply, as you know, prices go down, and so the bond prices will go down, and then that's when you lose money, because you won't get your $10,000, you probably get less than your 10,000. So assuming that the bond price falls to $90 per price, per issue, or per bond price, or per unit, rather, per unit, yeah, then you're going to get $9,000. Of course, in addition to the interest you've taken before, but that's not what you want. You want your full capital back, isn't it? Right. But when the bond price is rising, which means people really love that bond because of the coupon, and that would tend to happen when interest rates globally is so low that everybody's looking for bonds that have high interest rate like this one, regardless of whether they even fear that Nigeria might be able to pay or not. But they just love that interest rate, and bond prices rally, and so it could be like 102, 105, or even 110. And so when it's like that, then if you're going to sell early, then you won't just get $10,000. Let's assume it's 110, then you're probably getting $11,000. So you make more. So that's the thing with selling before maturity. But if you don't want to sell before maturity, you don't want to be involved in all this trading stuff and the risk and rewards of it. You just want your interest rate every year, JJ, and then just at the end of your 5 years, you take your $10,000. Then the best thing for you is to just hold to maturity. So that is it on this Nigeria's domestic US dollar bond. The first time we've had it, and it's for retail investors, to be honest. It's really, for you guys to invest in. So yes, buy, sell, or hold. I would swing to the position of buy. That is my money brief for today. Do have a profitable day ahead. Bye.